Hello and welcome everyone to this CEO presentation together with Sonny Mirborn, CEO at Alcadon. My name is Adrian Gilani and I am an equity research analyst here at ABG, responsible for covering Alcadon. And we are going to dig into some of the Q4 results and some of the outlook going forward today. First of all, I'd like to start out with the trend in the UK, which was the standout performer, you have to say, in the Q4 results. Can you just talk a bit about what drove the impressive organic growth in UK?
Definitely. I mean, we had an organic growth in the UK of about almost 40%. So it's of course a substantial growth that we're really happy about. We saw this a little bit coming when we did the acquisition. It's a very interesting market right now. I mean, we said before that the underlying market trend is about 14 to 15% growth if you look at the segments where we are present today. So basically we do deem that we have taken market shares during the quarter, and especially I would have to say that it's the data center part of the market and the FTTX part that has grown substantially. We are focused on, especially on the FTTX part, on small to mid-sized customers like the altnets, and this has been a very good market for us. Also the structured cabling market has grown, albeit not at the same pace as the data center part and the FTTX part, but a really substantial, nice growth.
Okay. And when you talk about market growth around 15% and you taking market shares, obviously the goal is always to take market shares, but how long can that really continue in your view, that you can outgrow the market, so to say?
If you look at the last 10 years, the estimate is that the market has grown by 14.5% approximately, and the growth, the annual growth of network center has been, I think, between 16 and 18% a year. So over time, consistently, they have been able to grow their market shares for sure. Now, this is a very substantial growth during Q4, and of course, we can't really count on that growth rate to continue for the next 5 years annually, but still we think that they can maintain a rather high growth rate for sure.
And then also when you did consolidate the network center into the group, there was a dilutive effect on the margins, and you stated that you want to bring margins up in the network center. Can you just give us an update on how that journey is going so far?
Yeah, sure. I mean, on the operating margin side, or the EBITDA margin side, they were at 8.5% EBITDA margin or rolling 12 when we did the acquisition, and we stated that with growth we do expect that margin to increase, which it has done as well during Q4, and we expect that to continue as well. Now it's dilutive on the positive side instead for the group, so we expect that trend to continue basically.
Yeah. And looking at Germany as well, this has been a market where I think a lot of people had expected perhaps a quicker ramp up in sales with the big contract that you signed. In Q4 we actually did see a significant sequential uptick in sales. Can you talk about what the status is with this, with the current deal with Deutsche Glasfaser, and perhaps when you can be at full run rate on that?
Yeah, of course. I mean, this deal has taken a lot longer time than we expected, a lot longer time than Deutsche Glasfaser expected. They've had some reorganizations, etc., that has prolonged everything for us. But before the summer of 2022, we were able, contract-wise, to visit the contractors themselves. Did not have to wait for Deutsche Glasfaser anymore, and that had a very positive effect. We were able to sign agreements with the contractors, and we saw that the run rate was steadily increasing, and that is what we see a positive result on now during Q4. One has to remember also that before 2022, in the comparison figures, it was basically only sales to city networks. So we basically gone through a transition phase where we now have sales only to contractors basically, and before it was basically only city networks. So it's a transitional phase where we dedicated all our efforts towards the contractors instead of city networks, but it works very, very well. And regarding the run rate, I'm happy as long as we take step-by-step approaches to increasing the run rate with the contractors over time. And I think that over 2023 we are going to see continued gradual ramp up.
Okay.
For sure.
And looking at that sort of switch and going from all the sales to city networks to working with a range of different contractors, how does that change the margin picture for you and the need to tie up capital and sort of OpEx space? What does what changes in the business model there?
I'd say that on the margin side, it doesn't really change much. I'd say that the competition was perhaps slightly higher towards the city networks, where they not always looked at the quality side as much as a contractor does. But I would have to say that on the contractor side, when it comes to tied up capital, yes, we are tying up a lot of capital in Germany because we see this growth coming. And with the disturbances that we have in the supply chains today, we have to make sure that we have the products on stock. And this is a common problem for everyone in our industry and in other industries as well that we see. But over time, we see that this will gradually improve as well.
And if we talk a bit about that, regarding the input materials, both the availability of input materials, but also the pricing, which has sort of hampered your growth margin or gross margin in recent quarters. Can you give us a status update of where you are now, both with Network Center and perhaps in the old Alcadon, so to say?
Sure. I mean, you could say that organically we are kind of back to the old figures, and usually we say that 1 to 3 months is what we need to pass on price increases. It took slightly longer time during 2022, partly because we were stuck in a couple of customer agreements and they were growing quite a lot, where we couldn't do much during the first 8 months of the year. But also when changes occur due to the exchange rate, and we buy a lot in euros and dollars, it's a problem for us. It takes a little bit longer time to move on price increases. But during Q4, we were able to do that, and that's why we saw a sequential, quite significant improvement in the gross margin side. Also, one has to remember that in Network Center in Germany, we have slightly lower gross margins. So we have a natural dilution there from those acquisitions that occur over time. But we're quite happy when we look at the development per country. We have a very strong development there, and especially in Sweden, where we had a very negative effect during the first 8 months of the year. There we see a very positive effect right now on the margin side.
Okay. And on that sort of effect, in a scenario where we see input costs perhaps decline and the dollar weakening against the SEK, how do you deem your pricing power in a scenario like that to be able to maintain high prices?
Normally what we've done historically is that we do not move forward 100% of the price increases. We move on perhaps 75 to 80%, so that when prices bounce back, we keep them steady or maintain them or even increase them on the slight side. What that does is it helps us on the margin side for sure, over a consistent period of time. We saw that during 2020, for example, we had the same effect. So I would deem on the gross margin side, we don't have any hesitations anymore. The disturbances on the supply chain side, they are still there. We still have a cost inflation, but it's not to the same extent that we saw during 2022 for sure.
Okay. And if we look at the Nordic business, isolate that for a while, there was some mixed effects in Q4. Some of the Nordic countries performed better, some a bit softer. Can you just explain what the picture is like in the Nordics right now?
For sure. No, it was a mixed picture, as you said. I mean, in Sweden, we had a 17% growth, and we had a very nice profit growth as well. And that came basically off the back of increasing our pricing, of course, and getting the margin effect. But we have done a few things right in Sweden, I have to say. We are increasing our market shares, and somehow we haven't seen any signs of an economic slowdown in Sweden at all. In Denmark, you could say that we have 5 large FTTH customers. 2 of them have started to prolong their projects a little bit. That has affected our sales during the quarter. We see over the long term, these projects are probably going to be even larger, but it's going to be over a prolonged time period, so to speak. But nothing that worries me today. Norway, however, we see a lot of our customer on the construction side being a bit worried, halting their investments a little bit, but we saw the same trend during the pandemic, and we had a very good couple of years in Norway then, and we see that the pipeline looks good for the next 8 months in Norway, so we're not particularly worried about that as well.
Okay. And to round off, I would like to sort of look a bit further out into the future. You have some ambitious targets for 2025 that you want to reach with. If you look at the balance sheet currently, it looks on near-term numbers, it looks a bit stretched with the high debt. Can you just talk a bit about how acquisitions play into this larger sort of 2025 ambition that you have, and if you are willing to stretch the balance sheet further to do acquisitions near term as well?
I would say normally no, I'm not willing to stretch the balance sheet any further. We have a very nice pipeline of acquisitions that we're looking at continuously. So if we had an enormous amount of capital, we would for sure be able to scale up significantly. And that might be the case if we want to scale up in the near term, that we would go to the market and do a capital injection based on those acquisition targets. But even without those acquisitions in mind, we would be able to do smaller acquisitions during the year on the back of an improved cash flow for sure.
Okay. And with that, I'd just like to thank you for coming here and presenting the Q4 numbers and giving us a status update on the outlook as well. I'll just leave it up to you if you have some final words before we round off.
No, thank you. I think it was a good quarter. We were very happy about it. I mean, it's not every quarter that we get to double the EBITDA and the sales, of course. So we are satisfied.
Okay.
Thank you.